You just got your first DoorDash payout. The money looks incredible. You check your bank account and smile. No taxes were deducted. No Social Security, no Medicare. It feels like you just got a serious raise. You think about all the freedom. You set your own hours. You work whenever you want. No boss, no meetings, just you, your car, and unlimited earning potential. This is what financial independence feels like. For the next 3 months, the paychecks keep coming. Every week brings more money. You deposit it all into your account. You spend it freely. You finally feel financially secure for the first time in your life. You assume taxes were handled automatically. Maybe they were taken out somewhere. Maybe the company took care of it. You don't really think about it. Taxes seem like a future problem. Right now, you're just enjoying the money. December comes and goes. You're feeling great about your earnings. You made more money than you ever have. You start thinking about what you'll do with it. Save for a house, fix your car, take a vacation. The year has been incredible. Then April arrives. You open your mailbox and see an envelope with the IRS logo. Your hands shake as you open it. The letter says you owe $3,200 in taxes. Your stomach drops. Nobody warned you. Nobody told you this was coming. You realize you made a huge mistake. You spent all that money thinking it was yours to keep. But $3,200 wasn't in your budget. You don't have it. You're panicking. You feel sick. How did this happen? Nobody explained self-employment taxes. This is the reality for thousands of gig workers. They get hit with surprise tax bills they can't pay. Some take out loans. Some get payment plans with the IRS. Some face penalties and interest charges, all because they didn't understand how self-employment taxes work. But here's the good news. This doesn't have to happen to you. Understanding self-employment taxes isn't that complicated. By the end of this video, you'll know exactly what to do. You'll be prepared. You'll never get surprised by a tax bill again. We're going to explain everything you need to know. Why you owe taxes as a gig worker. How self-employment tax works. Income tax. The IRS forms you need. Deductions you can claim. How to calculate quarterly taxes. And how to file your taxes without paying a CPA. First, let's understand why gig workers are different from regular employees. When you work for DoorDash, Uber, or any gig platform, you're not a W-2 employee. You're self-employed. This one fact changes everything about how your taxes work. When you're a W-2 employee, your employer withholds taxes from every paycheck. They automatically deduct federal income tax, Social Security, and Medicare. Your employer also pays half of your Social Security and Medicare taxes. You never see these deductions. As a self-employed gig worker, nothing is automatically withheld. The gig company sends you 100% of your earnings. No taxes are deducted. No Social Security. No Medicare. Nothing. You receive the full amount. Then you're responsible for paying all of it. You owe federal income tax on every dollar you earn. If you earn $20,000 as a gig worker, that's taxable income. But unlike W-2 employees, nothing was withheld. So come tax time, you owe that tax. That's the first piece of your tax bill. But here's the part that makes gig workers' taxes so expensive. You also have to pay self-employment tax. This covers Social Security and Medicare. As a W-2 employee, your employer pays half of this. As self-employed, you pay all of it. This is huge. Social Security is 12.4% of your net earnings. Medicare is 2.9%. Combined, that's 15.3%. So if you made $20,000, you owe about $3,060 just for Social Security and Medicare. That's before you even pay income tax. Now add your income tax on top. Depending on how much you earned and where you live, income tax could be another 20 to 30%. So on $20,000 in earnings, you might owe between $6,000 and $8,000 in total taxes. The IRS classifies gig workers as self-employed because gig platforms argue they don't control how workers operate. You choose your hours. You choose your car. You're technically an independent contractor, so you're responsible for your own taxes. Income tax is based on tax brackets. The US uses a progressive tax system. You don't pay the same percentage on all your income. Lower amounts are taxed at lower rates. Higher amounts are taxed at higher rates. It's a step system. For example, if you're single in 2024, the first $11,000 you earn is taxed at 10%. The next amount up to $44,725 is taxed at 12%. Then it goes up from there. Let's say you earned $30,000, you'd owe about $3,200 in federal income tax. And that's just federal income tax. Depending on your state, you might also owe state income tax. Some states have no income tax, others have rates from 3 to 13%. This varies significantly. You need to check your state's rules. Here's the good news. You don't pay taxes on your full earnings. You can deduct business expenses. The IRS lets you subtract eligible expenses from your income. This lowers the amount that's taxable. That's how you reduce your tax bill. Common deductions include gas, car maintenance, insurance, phone bills, internet, supplies, and vehicle depreciation. You can also deduct a home office if you have one. These deductions add up quickly and significantly reduce your taxable income. The biggest deduction for most gig workers is the mileage deduction. For 2024, you can deduct 67.5 cents per business mile driven. If you drove 30,000 gig miles, that's $2,250 in deductions. This dramatically lowers your taxable income. You need to track your mileage carefully. Keep a log with dates, miles driven, and business purpose. The IRS can audit you and ask for proof. Without documentation, you can't claim the deduction. Fortunately, there are apps that track mileage automatically. The IRS Form 1099 NEC is a document that gig companies must send you. It reports how much money they paid you during the year. Any gig company that paid you more than $600 has to file a 1099 NEC and send you a copy. This form is critical for your taxes. The 1099 NEC shows your name, address, and the company's name. Most importantly, it shows Box 1, which is the gross payments you received. This is the starting point for your tax return. The IRS also receives a copy of this form. There's also Form 1099-K. This applies if you receive payments through third-party payment systems like Square, PayPal, or Stripe. If you use these processors for gig income, you'll receive a 1099-K instead. The information is similar, but the form is different. Gig companies must send you 1099 forms by January 31st each year. This gives you time to file your taxes by April 15th, but you should keep your own records. Don't rely solely on these forms for your calculations. Track your earnings and expenses yourself throughout the year. Here's something many gig workers don't know. As self-employed, you must pay estimated taxes quarterly. You can't wait until April to pay all your taxes. The IRS wants payments throughout the year. You must pay estimated taxes in March, June, September, and December. To calculate estimated taxes, multiply your expected annual profit by 0.9235. Then multiply by your estimated tax rate, divide by 4 to get your quarterly payment. Or use the IRS Form 1040-ES worksheet. It sounds complicated, but we'll walk through examples later in the video. The official deadlines are April 15th, June 15th, September 15th, and January 15th. If a date falls on a weekend or holiday, it shifts to the next business day. Pay online through the IRS Direct Pay system, by credit card, or by mail. Missing estimated quarterly tax payments can result in IRS penalties and interest, increasing your total tax bill. Paying quarterly helps avoid extra costs and spreads your tax payments throughout the year. The easiest strategy is to save 25 to 30% of every payment in a separate savings account and treat it as money already owed to the IRS. When quarterly taxes are due, the funds are ready. Throughout the year, track all income and expenses, save every receipt, and keep mileage logs. The IRS may request records for up to 3 years. Without proper documentation, you could lose deductions and owe more taxes. The easiest way to track income is with a spreadsheet. Record the date, payment source, amount, and category as soon as you're paid. Spend a few minutes each week updating it, then total your income and expenses monthly to make tax season much easier. For filing, use tax software like TurboTax or TaxAct for guided help, or hire a CPA to handle everything. Most gig workers can confidently file on their own using tax software. Choose tax software that supports self-employment income and Schedule C. Most major programs include these features, and it's worth choosing one that also offers audit support. Check reviews from other gig workers before deciding. Schedule C is where you report your gig income, subtract deductible expenses, and calculate your net profit. That final amount determines how much tax you owe, so understanding this form is essential. At the top of Schedule C, enter your business name, business address, and principal business activity. Most gig workers use the cash accounting method. Next, report your gross income and, if applicable, the cost of goods sold. Then list every deductible expense, including vehicle costs, gas, maintenance, depreciation, insurance, phone, internet, office supplies, utilities, and home office expenses. Add everything together to calculate your total deductions. Once your expenses are entered, they're subtracted from your gross income to calculate your net profit. This amount is reported as your self-employment income and determines both your income tax and self-employment tax. The more accurate your expense records, the lower your tax bill may be. Schedule SE then uses your net profit to calculate Social Security and Medicare taxes, and most tax software completes it automatically. Form 1040 is your main federal tax return, where all your income, deductions, credits, and taxes come together. Your net self-employment income from Schedule C and your self-employment tax from Schedule SE are both reported here. If you qualify for itemized deductions, you claim them on this return. The tax software then combines all income, subtracts deductions and credits, and calculates your final tax bill. You can claim either the standard deduction or itemize your deductions. The standard deduction is a fixed amount set by the IRS, while itemizing lets you claim eligible expenses. For many gig workers, business deductions make itemizing the better choice. If your income is lower, you may also qualify for tax credits like the Earned Income Tax Credit. Most tax software checks your eligibility automatically, and these credits directly reduce the amount of tax you owe. The federal tax deadline is April 15th. File your return by that date or request an extension, which gives you until October 15th to file. But any taxes you owe are still due by April 15th. Filing early helps you receive refunds sooner if you're eligible. E-file through tax software or a tax professional for the fastest, most secure option. Electronic returns are typically processed within 21 days with direct deposit, reduce errors, and are much faster than mailing. If you're due a refund, choose direct deposit and provide your bank account and routing number. With e-filing, refunds often arrive within 21 days, while mailed checks can take much longer and are easier to lose or steal. Many gig workers also make costly mistakes, such as reporting incorrect income, missing deductions, failing to track expenses, mixing personal and business costs, claiming invalid deductions, or missing tax deadlines. Avoiding these errors can save you money. The biggest mistake gig workers make is forgetting to claim business deductions. Reporting only gross income without subtracting eligible expenses can greatly increase taxable income and lead to paying far more tax than necessary. Keep detailed records of every business expense. At the same time, never claim personal expenses as business deductions. Only expenses directly related to your work qualify, and the IRS carefully reviews this if you're audited. Many gig workers incorrectly claim mileage deductions. You can only deduct miles driven for business, not commuting or personal errands. Keeping accurate mileage records is essential because the IRS frequently reviews these claims. Another common mistake is skipping quarterly estimated tax payments. The IRS charges interest and underpayment penalties on unpaid taxes, increasing your total tax bill. Paying quarterly on time helps you avoid these extra costs and stay compliant. Never claim deductions you aren't legally allowed to take. Claiming personal expenses as business deductions can be considered tax fraud. If the IRS audits you, those deductions may be denied, and you could owe back taxes, penalties, and interest. Also, don't miss the April 15 filing deadline. Filing late without an extension can trigger a penalty of 5% per month on unpaid taxes, plus interest. If you need more time, request an extension before April 15th. If you can't prove your income or deductions during an IRS audit, those deductions may be denied. You'll owe additional taxes, plus penalties and interest. Keep every receipt, maintain a mileage log, and save earnings records. 3 years of documentation is the standard. Most IRS audits are handled by mail. You submit proof of your income and deductions, and the IRS reviews it. Good records make audits far less stressful and much easier to resolve. The IRS audit rate for most gig workers is very low, generally under 1%. Reporting all income from your 1099 forms and keeping accurate records reduces your audit risk. The IRS mainly targets returns with unrealistic deductions or unreported income that doesn't match information they receive. For example, Sarah earned $25,000 driving for DoorDash. She claimed $9,600 in legitimate business expenses, leaving a net profit of $15,400, which is her taxable income. Using the 2024 tax brackets, Sarah's $15,400 taxable income results in approximately $15 to $40 in federal income tax. She doesn't qualify for major credits. Her state tax is about $400, depending on her state, so her income tax is roughly $1,140. For self-employment tax, Sarah's $15,400 net profit multiplied by 0.9235 is $1,212. Then, 15.3% for Social Security and Medicare is $2,175. This is significantly more than income tax. Self-employment tax is her biggest expense. Sarah's estimated total tax bill is about $4,515 on $25,000 of gross earnings. This includes about $1,940 in income tax, $1,175 in self-employment tax, and roughly $400 in state tax. That's around 18% of her gross income, showing why tax planning is essential. To file, gather your 1099 forms and financial records, open tax software, enter your personal information, report self-employment income on Schedule C, then calculate and claim all eligible business deductions. Next, the tax software automatically calculates Schedule SE for your self-employment tax. Enter any additional income, then claim either eligible deductions or the standard deduction. Review your entire return carefully, e-file it, pay any taxes owed by April 15th, and keep a copy for your records. Most states also require a state income tax return for self-employment income. Tax software usually prepares both federal and state returns together, so verify your state is included. Some cities require business licenses or local tax payments, so check your city's website for current requirements. You may need to pay a small annual license fee or file a city income tax return. While these obligations are often minimal, failing to comply can lead to fines. After filing, prepare for next year by saving 25 to 30% of your earnings, making quarterly estimated tax payments, keeping organized records all year, and hiring a CPA if your income becomes substantial. Claim every legitimate business deduction available, including home office supplies, professional development books, tax software, safety equipment, phone and internet service, and, if eligible, a portion of your home office expenses. Every valid deduction lowers your taxable income and saves money. You now understand income tax, self-employment tax, quarterly estimated payments, deductions, documentation, required tax forms, and the filing process needed to manage your taxes confidently. Managing taxes as a gig worker is totally achievable. Millions of self-employed people do it successfully. The key is understanding the system, planning ahead, keeping good records, and following the steps we've outlined. You now have the knowledge to avoid those surprise tax bills. Stay proactive, stay organized. You've got this.